Hi everyone! So it seems like Pfizer has a surge of optimism after its latest earnings report when it guided its full estimates for the year up, although not in its stock price. And then in my previous video about Pfizer, I said that the market might be up for a bad surprise after the COVID revenues for Pfizer will dwindle a little bit, but right now that not seem to be the case, and Pfizer is guiding its estimates up. So I decided to check it out again and see if it's a good buying opportunity now, and perhaps I will increase my position if I do see an upside in its stock price. And if you're new to this channel, hi, I'm Alex. I'm a retail investor, and this is my current strategy with dividend stocks. I try to buy them when I think they have a kind of an upside, and I hold them until they reach their historical valuation, and when I think they don't have an upside anymore. So you are welcome to join me on my journey, which I share here. And if you are not new to this channel, then I just want to make sure everybody saw before I make the video to celebrate 200 subscribers, which is super exciting. I thought that it might be a good idea for you guys to just give your ideas of stocks if you want me to check them out and hear my opinion about it. Maybe your best ideas, maybe some stocks you're curious about. So I will link the post down in the description, and I'll give it a few more days, and then I'll make the video. No pressure. I have a few responses there already, and I have a few ideas from comments and emails I received also. So just if you do want to pitch in, so now is the time. Yeah, but today let's talk about Pfizer. And in terms of format, I think I'm just gonna show the fast graphs today and speak everything I have to say and tell the whole story and add screenshots while I edit. I could have done a presentation today, but I don't know, just feels like it's gonna flow better for me today. I don't know, I'm still experimenting with the format. If the lack of consistency drives you crazy, welcome to my world. This is me, but I will probably settle on at least a few formats eventually, but I'm still experimenting with it. So yeah, so let's look at the Pfizer at the fast graphs. I'm going to give a brief overview of how we came here and what has been happening until now, what is happening now, and how do I see things going forward from now. So just to give a quick recap of Pfizer, Pfizer has been a kind of a no-growth stock for over 20 years. What it is known for, that it has done little in terms of growth zero in terms of growth in revenues, in profits, and in the stock price. And then I think that if you're a dividend growth investor, that's pretty much all you need to know, probably. Honestly, I'm going to just say it right off the bat. But I'm here today to find out if there is currently an upside, and we will look into that. So it was not really growing, not really doing anything for many years, and then COVID hit, and Pfizer was did a really good job and was really efficient on capitalizing on its COVID vaccine and treatment, and it had a huge, obviously, surge in its revenues and its earnings, essentially giving it a windfall of around $35 billion in operating profits, depends what you look on. And then knowing that its major blockbuster, which is Eliquis, is facing a patent cliff in 2026, and that the revenues and the profits from COVID are temporary, Pfizer was kind of desperate to find the newer sources of revenue and went on a crazy shopping spree where it acquired a few big and small, from startups to huge companies, culminating in the huge acquisition of Seagen, I'm not sure how to pronounce it, a company with a cutting-edge technology in fighting cancer, essentially building the oncology portfolio of Pfizer. But it did pay $43 billion for this acquisition, and overall it spent around $70 billion on all the acquisition since 2021, which again, the windfall from COVID was around 30, 35, 40, depends how you measure it, $1 billion. So this was not enough for all those purchases, and Pfizer raised its debt and took on a huge additional pile of debt to finance all those acquisitions. So currently Pfizer is sitting on a pile of debt of $60 billion after it spent the $66 billion in cash for the acquisitions, because part of the Seagen acquisition was in stock also. And this is pretty much where we are now. And now Pfizer is facing a lot of criticism, saying that essentially those investments are not paying off, and there seems to be no serious real impact, material impact on the financial performance of the company, both after the acquisitions and the very, very high R&D spending of Pfizer, with no significant upside that is currently obvious and certain. Of course, it has a rich pipeline, but we don't know which of those drugs will be approved and how material their success is gonna be for Pfizer. And also from the acquisitions that Pfizer made, which it seems like it did overpay for them, and now it seems that there's not gonna be a huge material impact, not enough anyway. And just to give an example of the acquisition of, the major example, the biggest one, is of the acquisition of Seagen, where Pfizer spent again $43 billion on it. And on the day of the acquisition, on the announcement, Pfizer said it is expecting Seagen's revenues to reach $10 billion in 2030. So just to give the scale, it is spending today, in 2023, in 2024, $43 billion to get of course, it's gonna increase gradually to get $10 billion in 2030, and that's just in revenues. That's not the profits of it. So I just was curious to get the scale of it, and I did just a very superficial, like back of the napkin calculation, and then to see what could be the return on investment and how good of an investment was it. So in 2023, Seagen had a $2.3 billion in revenues, and again, at the time of purchase, at the time of the acquisition, Pfizer was estimating for those revenues to reach $10 billion in 2030, which we can assume are anyway a little bit too optimistic. It could be a surprise for the better, but it's probably gonna be all on the optimistic side. So I just spread this growth evenly in a linear way over those years, which is also a little bit inaccurate, because probably this growth is gonna be not linear, and it might be a little bit more back heavy, and I'm gonna mention in the end the consequences of it. And then I just threw a profit margin of 25%, just looking at Pfizer's profit margin, which is really inconsistent, so it was very hard for me to estimate, but I kind of took the middle of it. It might be much more, it might be much less, and not necessarily Pfizer's overall margin is also applicable to Seagen's products, because it might be a different product mix with different profit margins, but I don't know, I just took the 25%, let's say, again, kind of napkin calculation, with the discount rate of 7%. Those are the present values of all those, and to sum them up, the net present value of this investment is around $9 billion, and Pfizer paid 43 for it. So I don't know, it's obviously an overpayment. Even if something in my calculation is off, how much off can it be? There's no way this kind of an investment justifies $43 billion. And I don't know, am I missing something? And am I too amateur on it? I don't know, what am I missing? It's really just economics 101. It's the simplest calculation. I did it just off the top of my head. I don't know, am I missing something? Does the management understand something that I don't understand? And am I too much of an amateur? It's supposed to be as simple as that. I don't know, it seems obviously it's not new. We see it all across, again, those exactly the profile of the companies that have no growth and they're desperate to get growth, especially with pharma companies which are facing a loss of exclusivity and patent cliffs, and they will do those stupid acquisitions when they are desperate. That's exactly what I was talking about in my previous videos also. So just an amazing example of it again. I mean, it's not really amazing. We know it and we've seen it so much with the AT&T and Altria and whatnot. But I don't know. Sometimes I want to be a fly on the wall in the meeting where when they try to decide whether that's a good investment, and the amount of justification that is probably going on there to justify this investment. I don't know. It's just again, tell me if I'm missing something. I mean, even if I'm a little bit off on the numbers, it's no way it does justify 4 times that. And obviously they overpaid for it, but I guess there is also the intellectual property that goes into it, the special technology that Seagen is having with oncology. I mean, they can capitalize on that, and they can use that in their own R&D, and there might come in the future a lot of prosperity and profits for Pfizer. But again, we have to look at the numbers. I mean, it is a business that is supposed to be profitable. After all, not only is it supposed to be profitable, it's the main goal of a business is to bring profits to its shareholders. So profitable it is probably not. So that's about the Seagen acquisition. So anyway, all this leads to a general feeling in the market that all those 70 billion in debt in acquisitions plus all the spending on R&D are not really paying off, and the investments that are made might be poor ones, that they do not have a significant impact on the bottom line, and not only for this year and next year, but currently analysts are estimating a flat EPS for the foreseeable future beyond 2030 even, which is absolutely crazy given the amount of investments with the acquisition and with the high R&D that Pfizer is making. And I'm guessing they cannot really account for in their estimates, in their models, for drugs that are not approved yet, and it's uncertain when and if and how much they will materialize into profits. But it just goes to show the amount of uncertainty after all those investments, that there is still nothing material to show for Pfizer. I think that is pretty crazy. And just to mention that recently hedge fund activist Starboard took a 1 billion stake in Pfizer and they issued a pretty severe critical report on Pfizer, criticizing the low returns on the investments that Pfizer is making, and its poor capital management, and essentially the erosion of shareholder value. So that's where we are right now. So now the $60 billion question: will Pfizer even succeed to make up for the revenue loss that is expected in the next few years with its major drug hitting a patent cliff and reaching an end of exclusivity by 2026, and by 2028 it is expected that there will already be a lot of generic competition in the market. There are a few tailwinds to the revenues in the next few years, and there are major headwinds also. So for example, the oncology part of Pfizer is growing really nicely. It is up 30% this year, and will probably end up making around $10 to $12 billion in revenues this year. But that exactly offsets the COVID revenues this year, which will amount to right now Pfizer is estimating at around $10.5 billion, which again, it's not going to disappear next year, but this year it was pretty elevated, even compared to expectations, because there was a new resurgence, and also there was a kind of a stockpiling that the government is making. I'm trying to avoid the keywords here. I hope I'm clear enough. So the revenues from the COVID solutions for Pfizer were a little bit higher than expected this year, and it's not like they're going to disappear completely next year, but everybody and me also are expecting them for kind of dwindling in the next few years, and hopefully COVID will be completely behind us, and maybe they will disappear at all. So those are kind of offsetting each other. And similarly, again, their major blockbuster Liquis is facing an end of exclusivity soon, but they do have a rich pipeline of drugs that are about to be approved. Maybe not. So it's really hard to estimate what will offset what, and what would be the trend of revenues for Pfizer for the next few years. And I think that's exactly what is driving the stock price down currently. The poor visibility and the high debt, the $60 billion debt that the company is sitting on right now, 57 after the small reduction this year, and the disappointment in the market that all those investments are not bearing enough fruits. So we kind of can see why the stock is trading at this low valuation currently. So if we look at valuation, it's we can see that the blended PE in the fast graphs is 10.5, but the forward PE is around 9.5, when the historical normal PE is around 11.5, 11.9. So it seems like the Pfizer is trading below its historical PE, but I would say it's absolutely justified because many things have changed, mainly the huge debt. I mean, it's a really different scale of debt that the company is currently sitting on, and there's kind of no material reason to believe that the company will be able to reduce significantly the debt in the next few years. It has reduced it by $4 billion this year, which is out of $8 billion of operating cash flow it had this year. So even with, I'm not sure it's going to be able to allocate $4 billion every year to the reduction of the debt. It does mention that it does want to reduce the debt, but how much will it be able to reduce and to repay the debt every year? It's gonna probably gonna be in even a smaller rate than this year. So currently it's sitting on 57 billion with again operating cash flow of about 8 billion. So it's a really very high debt, and it's gonna be very difficult to repay. So I'm not sure there is really an upside right now for Pfizer. Again, it seems like with all that being said, a PE of 9.5 is absolutely fair, and it absolutely makes a lot of sense that the stock will be trading at lower valuation than it did in the past. So I don't think there is a significant upside here. So the most compelling reason to invest in Pfizer might be the high dividend yield. But a few things. First of all, there is a reason why the dividend yield is high, because the stock is down, and that's never a good reason. It's not like there is impressive growth in the dividend or in the company. But another reason is just looking at the dividend cut that Pfizer did in 2009, 2010. It's cut its dividend when it made a huge acquisition, even bigger than Seagen, when it was desperate, also because it had a huge patent cliff in one of its maybe its biggest blockbuster back in the day, and to be able to finance this huge acquisition, it decided to cut its dividend. So I'm not saying the situation is exactly the same this time. Obviously, every case is different, but just to give a material for thought that today, Pfizer might be facing similar decisions where it does have a big pile of debt that it needs to reduce. It is facing also patent cliffs in its major drugs, and it desperately needs to produce those revenues from somewhere. So I'm not also sure how safe is this dividend. The silver lining, though, with this was that after Pfizer did cut its dividend then and made this huge acquisition, I cannot pronounce the name of the company that it bought there. It's like yes, I don't know. But after it did this acquisition and cut the dividend, although the saying goes that Pfizer Pfizer has been flat for 20 years now, but if we zoom to this period, we can see that after, of course, it also had the great financial recession then, but after it cut its dividend and made the acquisition, even if we're looking beyond the recession and we're not taking the complete bottom, we can see that there was a nice growth in its stock price, although not so much in earnings after it did that. So maybe shareholders suffered from the cut of the dividend, but whoever stayed enjoyed this really nice 70% climb in the stock price and enjoyed a very nice returns. But so just to say that maybe if Pfizer does cut its dividend, what kind of a justification there is to pay so much dividend when you have so much debt? I mean, obviously it's not the best. So maybe if it does cut its dividend and start to reduce its debt, and would be some kind of light in the end of the tunnel from all the investments that it is making, it might enjoy an upside then. But for me, I'm not gonna count on it. I'm not gonna bet on it. I don't think there is a significant upside here. I currently, again, hold a very small position, one of the smallest positions, one of a few smallest positions in my portfolio. Those are a few stocks that I hold, which have no upside, but have a high, and I usually say safe dividend. Now I see that the dividend it's not that it's unsafe, but I don't know. I see the possibility of Pfizer cutting its dividend again, and I can't say I'm against it also. So I am holding this position. I'm just not gonna touch it. I'm gonna leave it as it is. So that's my decision with Pfizer. And this brings me to a thought, which I'm gonna record it now and I'm gonna upload it in a separate video, but I'm just gonna give the teaser now. It seems like the current price that Pfizer is trading at is fair. It seems very fair, and that the market is giving it a fair price, calculating and taking into account all the information that is publicly available there. I'm not saying that I acquired all this information, but I acquired the major points. And when I did, I slowly and gradually realized that there is a reason for this valuation. And it just brought this thought, not for the first time, but I kind of want to dwell on it now, what are the odds for me, a retail investor, to have some kind of a special insight, kind of an advantage with a stock like Pfizer, which is one of the most popular, one of the most researched and followed and tracked companies out there, one of the biggest pharma companies. Obviously, I think most of the time the market is going to be efficient with stocks like this. And this is just a teaser because I want to discuss this point a little bit. And I have a few thoughts and a few examples I want to give and discuss. Okay, but then what am I doing with all my rest of my dividend stocks? So yeah, but that's going to be, I just want to separate it because it's a different subject and I'm going to get into different fast graphs of other companies. And I just don't want to make a mess out of this video. So I'm gonna stop here now about Pfizer. So for me, I'm just leaving it as it is right now. We'll see what kind of news there will be in the future, and if there will be a better opportunity, then maybe then I will reevaluate that. But then again, probably it's going to be priced in already. So for me, I'm probably going to hold it until the stocks gets to a point where I think it's kind of overvalued given all the information that is currently available. Like, for example, this point or this point, I don't know. I'll see. Right now I'm just holding a tiny, insignificant position, and I'm leaving it as it is. So yeah, so that's it for this video, and I'll see you in the next one, which I'm recording right now. Bye bye.